Hello everyone, this is Paul from the APN Academy, and in this video we're going to be looking at multiple time frame analysis, or what sometimes you can call multi-time frame analysis. Now, in the forex industry or the trading world, there are very many effective ways you can use to do analysis or to do your breakdowns of the markets, right? Now, one of the most effective ways or methods is the multi-time frame analysis. Now, today we're going to be looking at what makes up the multi-time frame analysis and how can you effectively do it, right? So I have come up with two aspects that I've come up with to help us to go through the multi-time frame analysis easily, right? So which one is that first one? The first one is understanding timeframes. Now, I've been speaking about the issue of timeframes in very many videos. Time frame is one of the major reasons why traders lose money. So in case you would like to be consistent or profitable consistently, you need to understand timeframes. We're going to come back to this. Right? So this is the first aspect you have to look at. Then the second aspect you have to look at is understanding the type of trader you are. Most people do not understand the type of traders you are. You find today someone is scalping, tomorrow someone is intraday, the next day someone wants to swing. So it takes you long to understand exactly what you're doing in the market. If you're wondering why you know everything, but you're not really consistent, it's because you keep on changing. You keep on changing every day like a chameleon, right? If you don't know if you cannot do the same things all the time, you cannot follow the same rules all the time, you're not going to be consistent for a very long time. Are we together? You must follow the same rules all the time so that you can understand the mistakes of those rules and what is working, what is not working, what should you change and what should you not change, right? So for us to do multi-time frame analysis effectively, you need to understand these two aspects. But before we go any further, I would just like to put across some don'ts when you're doing multiple time frame analysis. For example, one of them is if you are doing multi-time frame analysis, do not analyze going in an ascending order. You have to analyze going in a descending order like this, right? What do I mean by a descending order? By descending, I mean that you should start from the big time frame. We're going to come to the issue of time frame just shortly. Start from the big time frame, let's say monthly, while going down to weekly, while going down to daily, then you can go downwards. Do not do analysis in ascending order. By ascending, I mean some people do analysis starting from M15, they go to M30, they go to H1, etc, etc. They keep going. They keep going this side. Are we together? This is wrong. If you want to use these time frames to do your analysis, make sure you're doing it in a descending order. Start from H1, go to minute 30, go to minute 15. Or if you're using the other way around, monthly, weekly, daily. Do not start the other way around, daily, weekly, monthly. Are we together? Do analysis in a descending order if you want to do multiple time frame analysis effectively. Are we together? That is one. Then two, do not mix these time frames. Are we together? I'll give you an example. If you're a scalper, I already mentioned this one earlier, understanding the type of trader you are. If you're a scalper, you cannot start looking for structures or looking for direction in a time frame that is way too big for you. You're a scalper and you're looking for analysis or direction in monthly. Scalping, you're looking for trades that you're going to stay in for a few minutes. Or if you're an intraday, you're looking for trades that you're going to stay in for a few hours, or by the end of the day, you've closed your profits or your losses, right? Now, you cannot be looking for your structure in weekly, because weekly, it means that you're going to be in that trade for long. The structure you're creating, that you're getting or identifying, is going to give you trades that are going to give you big risk-reward ratio, but also require patience for you to stay in them for long. So you cannot be switching between timeframes that are used by intraday and timeframes that are being used by swingers. We have discussed most of these importances of the timeframes in the video of timeframe. If you've not watched it, please watch it and look at the importance of all the timeframes. But still, we're going to go through it briefly here so that we can understand for the purpose of the video. Now, these are the two aspects that you need to put into consideration if you want to do multi-time frame analysis effectively, right? Now, let's break down these two one by one, right? Let's start with the time frame. Let's start with the time frame. Now, I am going to give two examples for intraday and swingers, how they do multiple time frame analysis. Now, what do you need to understand about time frames? The first thing you have to know is you have to split into three. I've been saying this, and also I've mentioned it in the time frame video. You need to have a time frame for analysis, right? And you need to have a time frame, or you need to have time frames for entries. Are we together? You need to have time frame for analysis, and you need to have time frame for entry. Now, in analysis, what do we have? In analysis, we need to have direction, right? You need to get a time frame that gives you direction, and you need to get a time frame that does what? That gives you the structure that you're going to trade. Do I make sense? In case I'm very fast for you, or the video is very fast, you can just slow it down and watch it slowly so that you can understand. Multi-time frame analysis is very effective because this is what we do. If you've been watching our previous videos and the examples that we do give, we do use multi-time frame analysis. So if you understand it, that how you're supposed to switch through the different time frames, it's going to be very easy for you, and you'll be seeing exactly how you're supposed to move through the different time frames. Now, after identifying the direction and structure, that's when you zero down to. You first identify direction, then you identify the structure you want to trade, and then you get the entry, right? Now, under entry also, we have what we call refining, right? You're supposed to refine your entries. Now, why do we refine? We refine because we want to get a better risk to reward ratio. Now, these are the two aspects that you need to understand about time frame if you want to do multi-time frame analysis. Get the time frame that you're going to use to do analysis, and then time frame for entry. But also under analysis, you have time frame that will give you direction, and then time frame whereby you get the structure you're going to trade. Now, by direction, I mean a time frame that is going to tell you, are you in a downtrend or are you in an uptrend? Are we together? Then after getting that, to know that you're in a downtrend or an uptrend, you need to get a structure you're going to trade. By structure, I mean you're either getting shapes, or you're getting an impulsive move, or you're getting a pattern. We have spoken about shapes and impulsive moves, right? So shapes, we have like W's, we have M's, we have head and shoulders, we have inverse head and shoulders, etc. Then impulsive moves, this is where the market has impulsed, or it has moved aggressively, and you need to apply what we call a Fibonacci retracement tool. Those are all structures that you can trade. So you have to first get direction, then identify the structure. The structures, I've listed them for you. After that, identify your entry time frame. Go to your entry time frame and start looking for entries. For example, if my structure is in daily, I can't get my entry in daily. Does that make sense? If you have questions or something that is confusing you, please just put it below in the comment section, or you can tell us which time frames that you use, and we can give examples. We can do a back testing on your different time frames. Tell us the time frames that you use in the comment section. We shall post multi-time frame analysis basing on the time frames that you've told us, right? So identify also your entry time frames, and after identifying your entry time frame, to get a better risk to reward ratio, you have to go to a more smaller time frame to refine that entry. For example, if I'm taking my entry in H1, I can refine in minute 15. If I'm taking my entry in H4, I can refine in H1 or minute 30. Are we together? But if you're using H4, it means that it's a swing, so meaning it's better you refine in H1, right? So this is for time frame. These are the things that you need to understand when it comes to time frames, and I'm going to do multi-time frame analysis. Now, the second one is understanding the type of trader you are. Now, I'm going to give you time frames, how they are split up. For example, we have monthly. Swingers use monthly for direction, and then they get their structures in weekly. This is for swing, right? This is for swingers. And then intraday, they get there. You can get your direction in monthly or weekly. Any of them can work. You can use monthly or weekly, any of them can work. And then you get your structures in daily. Right, together. You get your structures in daily. Now, scalpers you can use daily, or you can use H4 to get your to do your analysis from and get your structures. Are we together? Then you can take your entries in minute time frames, any minute time frame, depending on what you're comfortable with, minutes, right? You can take your entries in minutes. Let me just repeat this. Swingers get they do their direction from monthly and then get structure from weekly. Are we together? Then they can take their entries in. They can take their entries in hourly time frames, hours. It's most preferably H4, right? You can most likely use H4. This is for swing. And then intraday they can use monthly and weekly for direction, and then they get their structures in daily. Now, intraday also they can use hourly right? You can use hourly, and then you can refine in minutes to refine, but your entry is in hourly timeframes. Then scalpers, you can use daily and H4 to get, even H1 sometimes. Some people prefer to go up to H1, right? You can get your structures daily, H1, H4 and H1, and then take your entries in minute timeframes. You can use minute 5, minute 15, minute 1, because you're going to stay in the trades for a few minutes. You're not going to do longer hours, or you're not going to hold for days. Are we together? So having understood this, this is just theory. Now I want to show you exactly how this is done on the real chart. Okay, so I am on my charts, and I said we're going to look at two examples, intraday and swing trade. So let's start with the intraday. And remember, we said intraday, we can get our directions from monthly and weekly, and then we get our structure from daily that we are going to trade. Structure can be shaped, can be an impulse, can be retesting a previous lower low, previous higher high. So I'm going to use GBP USD. That's the Great British Pound to against the US dollar. So now let's start. I'm in daily. Let's go to our weekly time frame, and then we can get our direction from there. Now, starting from weekly, what do we see? We see that the market has been pushing down, right? It has been making lows, lower high, lows. It made a low here, lower high, a low, right? So now there's a high chance that wanted the market to come and retest here, right? So that the direction is telling us that we needed to push up, meaning we're going to be looking for buys. Now, when I go in my structure time frame, which is daily, I need to be looking for a structure that is going to be giving me a push up, right? Now, when that structure is seen, that's when I can start looking for my trades in my entry time frame. And we said, what's our entry time frame? We said our entry time frame is H1, right? You can use H1 or H4, but we're going to prefer H1. Let's just go back to weekly so that we can observe okay here. So the previous week ended when the market had made a bearish candle. Now we want to take our buys upwards. So what are we going to do? We want to go to daily and identify the structure that we are going to trade. Any structure that I've mentioned above, W's, inverse head and shoulders, etc. Those are the things we're looking at. So currently right now, if you look at the screen here, or my chart where the price is, I don't have a structure yet. So we're going to wait for a structure to be formed. So let's just play it. We want a structure to be formed, and then we can take our trade. Now, the first time this market was failing to take out this area here, but then this area rejected it and pushed it down. But this is the first time price is breaking above it. So this is the area I'm interested in price coming to test, this area here, right? So this is going to be my area of interest, and I want to see a change of trend in this area here. Having identified this area here, right, I want the price to come back and retest it. Are we together? So I can just watch that from my entry time frame. I'm going to use H1, and then we can see how it plays out, right? So when it comes back to retest this area, I'm going to be taking my trade. It already retested, and we're not yet in. So we want the market again to give us a pushback, right? A pushback here, and then we can be able to take our trade. So if you want, you can use a counter trend line. It's up to you. If you want to use a counter trend line, it's also okay. So let's play, and we see how the market plays out. The counter trend line holds it. That's not a proper break for us. We want it to not yet. It comes back into this area here. So when the market rejects like this, this is the first time we're going to take our trade, right? So I'm going to just enter my trade from here, exactly from the current price. And then of course I want a 1 to 3. My stop loss will be below where the market cannot retest. We have structures this side. So my stop loss will be below here, and then I'll have a 1 to 3. Let's look for 1 to 3 here. 1 to 3 there. So now let's play out and see. Here someone may be asking, but this counter trend has broken. It wasn't broken because it failed to take out this structure here, right? You're seeing that structure held it. So that's why we did not take our trade, right? If it had broken, this trend line plus this structure would be entering the trade, but it didn't break it. So that's why it touched this standing point and then was rejected down. So now let's see how the market played out. Remember, when you take your trade, always make sure before you take the trade, you've considered all parameters so that you don't start panicking. If it hits your stop loss, it's okay because you've considered proper risk management, right? Now you can clearly see we went into profit, then we had a drawdown, but you do not panic. That's how you're supposed to trade. Consider everything before taking the trade, right? So I'll just extend this. Let's see if we hit our take profit or stop loss, right? So this is intraday that we are doing. The next example, we're going to do it for swingers, right? We're going to do for swingers the next example. So the market, the price is now in our direction and we're almost approaching our take profit. Let's see if we come back to hit stop loss or we shall hit our take profit, right? So the price is moving yet. Price is moving. Let's see if we hit take profit or it comes back against us. Never panic. Just use proper risk management and everything will be okay. So the price hit our take profit at this point here, right? Hit our take profit of 1, 2, 3. By 1 to 3, I mean that I am risking $10 to make $30. Are we together? So now let's look at the example of swingers. Now we're going to use the same example, but we're going to use this time weekly because we have said swingers use monthly, weekly, use monthly for direction, and then they get their structure from weekly, and then we're going to use H for our entry. So let's start from monthly. What do we see in monthly here for the direction, right? Let's start from monthly and we see what we see in monthly. Now in monthly, we can clearly see that the market approached a very strong level of support area. Now, and then we have a strong level of support area here, which the market approached in. So what do we expect? We expect the market to be rejected, at least to come and retest this area here, right? What I mean is, why do I say that this is a very strong area of support? When the market was there, it was rejected. When the market came back, price was rejected. Again, when it came back here, price was rejected. Also, again, it is in here. Even if they didn't reject it very high, but at least we expect it to come back to retest here, meaning our direction is upwards. So that's what we're going to consider. Now, let's go back down to our time frame to get our structure. What time frame do we use for structure? We've said for swingers, we use weekly. So let's just drop down to weekly, right? Let's see what we have in weekly. Now in weekly, let me just delete this. In weekly, we already see that the market is making lower low, lower high. Then the market broke down and made a lower low, right? Now we needed to retest this point here. Are we together? So we're just going to mark the area that we need the market to retest. And which point is that? The previous lower low that the market created. Which is the previous lower low? The previous lower low is this point here. So I'm just going to mark this point. And of course, let me bring out my replay tool. And then we want to take that trade upwards, right? We want to take the trade upwards. So now we're just going to wait until the week closes, right? Now this week has closed, so we go down to our entry time frame to observe change of trend, and then we can take our trade. So we say that we're going to use H4 to take our trade until the market retests that point, right? So let's look at H4. Now H4, what do we observe? We do observe a market that is struggling to break a previous standing point, which it's still failing yet. If it breaks that point, then we can take our trade. So let's see. The market did not break, right? The market came back down. So we have this structure is still holding price. You can clearly see price tries to break, and then finally it breaks above it. Now, what do we want to see? If you want, you can wait for a retracement, a weak retracement, and then the market. Let's see again, it broke down below, meaning it was a false breakout, right? Because wanted first to see a weak retracement. So not a valid structure yet for us, not a valid structure yet for us. We want a clean structure for us, and a proper breakout, then we can. Because now, let's look at this point here. Price came and created here this low here, which it was failing to break, but finally it broke it, right? It finally broke it, just like here. The market was failing to break this turning point, and finally broke out. But on the retest was very strong, so that's why we didn't take the trade. Now, the market created this low here. Now, it came and retested it. You can clearly see multiple rejections here, meaning it's a strong level. Now, we want on the break, right? Then we can take our trade. If you want, you can take it immediately. Like right now, I'll just take my trade immediately. So like here. So I'll just take my trade there. I want a 1 to 3 minimally. So my stop loss is just going to be below this structure here, a decent space below it, right? So will I get a 1 to 3? Not yet. So Let me just adjust my stop loss as long as it's not so tight. So I'll just adjust it just then. So now this is how my trade is going to be like. Let's see if we hit stop loss or we hit take profit, right? So this is a swing trade. It may take a bit of time. So you just have to be patient, right? So let's see if we hit take profit or we hit stop loss. This is for swinging. We started with the intraday. So this is for swingers, right? And swing trades normally take a bit of time. You need to be patient. If you're not patient, it's going to be very hard for you to be a swinger, right? You need to be very, very patient if you're a swinger and you're able to observe trade going, making, let's say, $100 profit, $200 profit, or $1,000 and coming back, right? So this trade hit our take profit at this point here, right? It already hit our take profit at this point here. So let me just adjust this. Now, that's how clearly we do multiple time frame analysis, right? You need to have a time frame whereby you get direction of the market. After getting direction of the market, then you get structure that you're going to trade. For example, here in the swing trade, we traded a previous lower low, wanted to see the market retesting the previous lower low. Now we have retested the previous lower low. What next? Are we going to see, because this is the current market price, are we going to see the market breaking above, or are we going to see the market continuing down because it's testing a previous lower low? The market can easily break above the previous lower low to change trend, but we don't know that and we cannot guess. Are we together? So this is how we do multiple time frame analysis. And if it's your first time to come across our videos, we produce every week, once or twice every week. So in case you found value in it, you can click the subscribe button if it's your first time. And then if you've been watching our videos, please do not forget to click that likes button because it enables those other people to come across our content and so that they can also benefit. Have a great time.